The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. Dow's down 11 at 25,003. It had quite a bit of a pullback this morning, but everything else is very positive. And this is fascinating. Why? Because look, you've got what we call a Chapman wave stalk leg formation here. You can actually see it a little bit better if I go to where I drew it here in the E-mini. There it is. There's the pattern. Has a long leg. There's that one long leg. We call it a leg, even though they're different peaks. Then it goes sideways for a while, but it has to be an oval formation, not a rectangle, but an oval formation. And then pop, it goes to the upside. So this is the leg. This is the body. And then it pops up for the neck. There's the neck, right? And then you get the beak. The beak comes right back into the body, and then other things can happen. So let's go back to the Dow. Have a look at this E-mini. It's up 22.50. Let me show you something really important, just on a very near-term basis. You've got a peak D in the 2-minute chart. It's just been absolutely fantastic all morning, even though the Dow was weak. I wonder if I can extend this all the way across. Yeah, look at that. You know, I always talk about walking the 9-period exponential moving average, especially if you're looking at the 9-period differential of the MACD. Look at that. And there it is. And now it's just pulled back somewhat. Got a peak D in the 2-minute. I always think of it as the daily charts. It's a 2-minute chart. This is what we practiced a week ago Wednesday for that all-day webinar. Then you can go to the weekly. In this case, it's the 5-minute. Just made a peak E with a kind of a doji top. No big deal. Holding really well. 27.04 all-time high. Well, all-time high. Today's high is 27.08.00. So it's not even, it's just 4 points, pulling back peak E. But here's the thing you want to be always looking at. The larger trend says that the monthly, no, the 10-minute chart. Remember, daily, weekly, monthly, actually 2-minute, 5-minute, 10 minutes, the same relationship, is still only in a leg C. Anything can happen. Even this leg C can extend. Yep, there it is. It's now got parallel highs. I don't know what the news is, but it just keeps flowing in. Boom. News comes up and you see a big spike in the E-mini. So this test of the left side high is a peak D double top potential right now. Unless it can crack through 2708, it can go to 2708.25. That really starts another leg. Could be an E, or could even be a brand new A. That would be an F in the 5-minute chart. And just now at this point, because it's made a double top of exactly the same price, this leg C in the 10-minute chart, when we think of it monthly, has extended. All right, enough with that. I always thought I know I get comments from people saying, hey, I love going through the Chapman wave techniques in these smaller time frames because it's a fractal, meaning whatever I do in the small time frame is comparable to what's going to happen in the bigger, because patterns repeat. So yeah, we got this pattern repeating here. Peak D, peak E, peak F/C. Why is it a C? Because there was a little peak right there. So that's a gray A, E/B, F/C. Holding strongly with the MACD like this is, you know what, we could even go a little higher. So what I say to subscribers to my opening call, we've really got long positions, and most of them have done extremely well. But I did set up a short position yesterday by saying if the S&P eventually, we're waiting for the S&P to get that missing leg D in the Chapman wave methodology. That's what we're always looking for. It made a peak C1, C2, kind of a phantom double top at 26.75.47, and then slightly lower on that right side, C2. I wanted to see D, and I want to see how close we can get to the 200-period moving average of 2703. We're above that. We're at 2705. The MACD is good. Stochastic's hinting that it's starting to lose momentum, but that's okay, because what happens is the stochastic is the torque, and it hands over that initial thrust to the upside to the MACD, especially if the MACD's histogram starts to expand, especially if the green line starts to expand way above the red. Now it's narrowing, so we're getting to the period where there's a little bit of tightness. Let me just show you something else here. Chapman wave automated resistance levels, 27 right here. He's got an overlapping, so we've got 2710.90 and 2708.08. We're going to watch to see how does this and this 200-period moving average, how does it all come together to maybe create some kind of a short-term top? You've got Amazon coming out after the bell with earnings. We won't look at that right now. I want to go to the QQQ, which will be impacted. QQQ has made that peak D, pulls back, and now it's in a new leg. Is this a new leg E, or is this an E/B? Well, I'm calling it for now. I'm just calling it an E because I don't need to do anything else. The technicals are very good. Haven't got any signs yet of some kind of a turnaround. So this is very strong action. Now, I have to tell you, because this is now leg B in the weekly chart, for the very first time since we made the low January the 24th, December 24th and 26th, this is the very first time that I can actually say the way that the MACD is about to cross positive in the weekly for the first time, after smashing to the downside from the October turn down. Anybody know anything about racing? There used to be do they still have it, the Grand Prix, the Le Mans track in France, and it has this wide turnaround on the racetrack, automobile racing, and that's what you got. And once you cross positive, in this particular case, you're at 0.24. This is the first time it's crossed positive. That means the histogram, the vertical line, the 0% line, has gone positive. I'm looking at this and I'm saying I have no idea what is going to get us back down to the December lows. I think that this is absolutely an internal low. Now we're only waiting for some kind of really series of bad news events, maybe February, could even be March, but coming up that'll test the downside. But wow, at this point, I have to say the area of 156 to 153 on the QQQ, I would say that, I'm not going to say for the year, but I would say in this particular phase, that to me looks like really, really strong support. Hey, I don't want to be wrong, but we'll just go one step at a time. So we actually are short the Dow, a position in the Dow, one-to-one short, because I said yesterday if the S&P crosses over peak C, we're going to short the Dow, thinking that this is the only one that needs to complete its move to the upside. Now you've got an extension up in both the Qs and the S&P. And look at the IWM. IWM is trading also in a peak E. It's kind of working harder and harder, but it's still moving to higher highs. So at 149.04, up $1.24. This is very nice. The MACD is good. Stochastic saying, it's getting a little bit heavy, but the on-balance volume it's at 85%. So that's still very good, but it's pulled back a lot from where it was just about 3 weeks ago. All right, let's go to gold just before we go to our break. Gold right now is trading up 10. Unbelievable. Up 10. It hit 1331.1 on the continuous contract this morning, trading at 1325.7. This is now leg D in the daily. I'm calling it D. It could be a recycle, but I'm calling it D for now. Most importantly, in the weekly chart, the one in the middle, it's in leg D. It's starting to come into a resistance area, but fabulous move in the MACD and stochastic. This is good action. We'll talk about the other currencies and we'll talk about the dollar when we get back. Basil Chapman, Tiger Technicians Hour. I'll be right back. Dow's down 3, S&P's at 24.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're back, and the Dow's down 16, the S&P's down, up 24. Just a real quick look at the E-mini. Yeah, so look, that was that peak D. Those are the technicals that I discussed in my webinar a week ago, Wednesday. And these are the things we're looking at, especially that double top false move when the technicals were weak. There's a peak E in the 5-minute, and we're finally getting that peak C even with the double top in the 10-minute. Will we get a D? That's the big question. All right, we'll be back in a moment. I wanted to go through silver. Silver's acting very well. This particular move here has all the prerequisites for a right arm extension. I don't want to go into that. It's in my Chapman Wave CD, introducing the Chapman Wave methodology. It is chapter 18, slide 340. And we're going to see, because this kind of pattern says there should be this is not a rogue wave. This is a right arm extension because the stochastic is still holding really at 84% in the MACD cross positive. But it's saying that there could be a pullback over the next few days. Silver at 16.06 had a high today of 16.20. I think it could pull back to the 15.75 level, maybe even 15.65. Just a kind of little hiatus as it takes a breather after a fabulous good few weeks. So we're going to look at high-grade copper. High-grade copper is trading at 2.782, up 0.014. We actually went into a copper position this morning, and this is one we did have a lot of success with. Then we had a lot of failures, but there were failures of, it's such a low price one, there were failures of pennies, but the pennies were percentages because it's very low priced. And I haven't even looked at it for ages and ages because I haven't been favorable at all inclined towards copper. I think copper is trying to tell us, and this really says to me now that I needed a couple of confirmations before I wanted to put together my next webinar for my subscribers. I think I'm now ready to do it. I'll start giving it all the details, and I'll be able to send it over to TFNN, because now I think we are ready to say that if high-grade copper manages to move into the $3 area in February, without breaking down below 2.60, but in February it goes to $3 and can hold there all the way into early March, then I have to look at this a little differently, and I have to say that's really good international action. If I look at wood, which is the iShares, the Timber and Forestry ETF, Nice candle so far in January. We've got a couple of hours to go to wrap up January, but look at that beautiful candle. But it's not a great candle when you're going from 63.88 in June down to 55. You know, it's almost 30 points. I would say that's a bit of a hit. So there's a lot of work to be done, but it is really good that the technicals in the major two time frames, the daily and the weekly, are starting to help the monthly. That's going to take a long time, but that's also international. Timber and forestry, global, hey, that's important. So now I can go to the EUR USD and say, wait a minute, the euro dollar currency pair is trading. This is, I don't know how to explain. Yeah, I do know how to explain it. I think we've got a separation now. For the moment, it's not going to last long, but a separation between currencies, gold and silver, I'll put the two together, the dollar, and I'm going to add this because it's so important to my thinking right now. In the big picture, I'm looking at this and I'm saying, how will, so the euro dollar is down, is at 1.143. It actually hit 1.1514 earlier this morning. Not great action. The weekly chart still looks terrible and the monthly looks terrible. Now I'm going to say, wait a minute, what impact has it had on the dollar? Now I'm going to say something that I have no idea whether it's going to be controversial or not. I'm just going to say it because I'm doing it purely on my technicals. The dollar, considering what gold has done, has not yet, it should, but not yet, has a broken 95.03, the low of January the 10th, number one. Number two is the second time it's testing the 200-period exponential moving average. This is the orange line right here. Number three is that the weekly chart is just having a high-level consolidation. Yep, goes to 97.71, pulls back to 95.03. It's at the lower end of the range. Yep, there is a chance of a dreaded H pattern here. The MACD and stochastic in the weekly chart are not very good. How price handles this is going to be really important. And the monthly chart, I'm just going to open this real big. You'll see what I'm talking about. The monthly chart from the low that was made back to the most recent low of 88.25 in February of last year, so it's about a year now, running all the way to the 97s. This is just a high-level consolidation, and you can see it's holding the 9-period exponential moving average. The MACD is at 89. The MACD is strong. The stochastic's at 89. So far, it's at 89, and that red line, the important line, is flattening out. So we're going to see what happens here. We are still long the dollar. We've taken a little bit off near the top, but I'm still feeling that this is a currency of importance, and this is going to be part of the big picture, because if the dollar really starts to break down, gold goes higher, all of a sudden you're going to have an inflationary aspect to it. I'm spending a lot more time on this opening gambit than I intended to. That's okay. See, the TRCCI, this is the Thomson Reuters commodity equal weighted index, is really not showing anything yet. I think when it does, it's going to be really quick. And if you look at the high that was made in this index way back in May of 2018 at 433.02, and the low that was made with everything else back in late December, this happens to be December 31. That was the low. It's rallied from the 391 area to the 403. Yep, that's nice, but really, look at it. This is a terrible picture. It's going to need a lot more to have those commodities really move up in unison. Now let's get to a couple of, crude oil right now is, up 0.84 at 55.07. Leg E in the Chapman wave, daily, and leg A right touching the 14-period exponential moving average in the weekly. Nice rally, but nothing compared to where it's come from. Thinking about going from the 76s down to the 42s. Yep, at 55, that's exactly what we were looking at, as saying this is exactly what we wanted to see. We wanted to see crude oil acting well so that it's part of the infrastructure. It's working. It means that there's demand for crude oil. We want that. Let's just look back at our E-mini. Yep, still pulling back. Okay, so now I've had a question. No, I don't want to go there. I want to go right here. The question, Square. Yep, Square is holding the 9-period exponential moving average now. It hit the 14-period. It's bouncing up. It's trying to fill the gap. It's at 72.97. Now, I'm not sure if the question was, would I just look at it? Would I buy it? Do you own it? I'm looking at it. I got a feeling this person actually owns it. If you own it, I would just say hold it right now. Part of your position should have a trading stop just in case at 72.96 right now. If it pulls back under 70, I take a little bit off because then I think it's going to struggle for a little while. And I think we're getting some quite near an important inflection point where I think on a shorter term basis, we should take a breather here in the market. So it's acting very well right now. It is, in fact, the weekly chart, strong leg A by the end of the day tomorrow. I don't think it's going to make a high above the high that, well, I shouldn't say I don't think. It doesn't look like it'll go above 78.15 to really, maybe. No, it doesn't look like it will, but if it does, that's a very positive. Right now, it's looking good. I just hold the position, and if you aren't in it, you could start a position now, but this is riskier than it would be if you already owned it. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. I want to take a moment here because I want to give a little lesson here, part of Chapman Wave methodology. In the futures, I do this not that often, but I keep it in mind that I want to do it. There was a low that was made in the E-mini at 26.75.75 at 9:20 this morning, and then a lower high, and then a higher high, and higher lows. And then there was parallel move, and these two bars at 9:40 and 9:50 at 26.81 round number. Oh, no. Oh, I missed it. No, I didn't. And then 26.81.25. That's right. I was looking at that. I was going to put this in as what I call a phantom peak, and then I changed the color. I just make it red. I didn't do that because everything here was so positive. But what I wanted to say, and this is something that I discussed in my webinar, but I just want to show that this means that that would be A, but it's a false peak because usually it has to be parallel. In this case, it was 25 cents higher, but it had all the look of a move based on the little wiggle that you got in the stochastic. So I would be ahead of the game, and this C now would actually be a D. And I put it in knowing that it was a phantom D, and very often C does pull back, then you can get your D. But if this really is a D, you're going to fall much sharper. And that's the reason why I was saying that you go step by step. So if I was already short via my peak D in the 2-minute chart, confirmed in the 5-minute chart, then I'm already there saying, you know, I don't care. You can go back up to D. I'm trading this because if this becomes a phantom D, a real D, phantom D, that MACD, the moving average convergence divergence, already the stochastic's gone to 82% after being 96%. So I'm ready. And then the next thing is if there is a real bounce, I in any case have to get out of these positions. So this is why I learned about the heads up of the phantom peak. And that's a little lesson. I'm going to go right back to our story here. So the next question was, I haven't finished the TLT, but I'll do this. SSYS, oh no, square. So just to finish off, square is, I would say that it's a riskier deal, right, to get in now at 72.95, even though the technicals are good. I would say, I'm going to say hold off. I know I could be wrong because this is like waves. I reread this book so many times, The Wave by Susan. Simple name, Susan. Anyway, Carrie. Just it talks about all these different waves in Tahiti and Hawaii and up in Alaska. Just an incredible book. And I keep thinking waves because I grew up right on the coast, right on the water's front, the very tip of Africa in Sea Point, Cape Town. Cape Town is on the little hook and then comes around and you get where Robben Island is, where Mandela was imprisoned. When I was there, there wasn't a prison. It was just a piece of island that was just there. Nobody did anything. And I lived on my window, my parents' apartment window overlooked all the way across to Robben Island. I used to be able to see ships crashing and all sorts of sea lines, huge sea lines. Anyway, so I used to go to the water and I watched waves. I've always been intrigued by waves. And people say, how did you go from music to the stock market? I say it's waves and timing. All right, so here we are at 72.82. I think that the wave here is starting to subside, the strength. So I would have to say wait a little bit. If you're in it, as I said before, I'd put in a stop. I'd even put a stop on part of the position, just a part of the position, about a point lower, and I'd just give it a little time because I think it is going to go into the 80s. But right now, square, we're looking at SQ 72.85 up $1.32. Very nice action. Let's see what the 120-minute chart is saying. Yeah, I haven't changed my mind. It is good if you were to buy it now. I would buy it with a February call. A February, it's at 72.80. I'd buy it if you can get a 73. I don't know if it comes in 73 or 72.5. I'd buy a very close to the in the money call. Or just slightly out, and that's the way I would do it. Just to give yourself time and patience to be able to think about it. All right, that's square. The weekly chart is just turning positive with the MACD. We'll look at this again in another few days. Just give it a little time. Next question was PHM, Pulte Homes. Pulte Homes having a really good session today. It's up 0.68 at 27.91. This is leg peak C in the weekly chart. This is really important. It's part of that whole timber and forestry ETF that I was looking at. It's part of the interest rates. We'll look at it. I like it. Now, here's something else. If I was asked right now, would I buy it at 27.93? I'd say, you know what? I'd start a position because I think rates are in a very nice area right now. I don't think they're going to go much higher, much lower at this particular point. So I think so. And at 27.95, I'd have at least a 2.5 point stop for about 3 days. Let's see how it acts there. If it can get to it's at 27.95. If Pulte Homes PHM can trade at 27.95 right now, if it can even touch 28.50. That is really going to improve the daily chart a lot. So that's the way I'm looking at it. Key support, I would say key support is at 27.07, but I would still give it a little bit of room just for a day or two if you were getting in now. If you're holding it, congratulations. Next thing I wanted to go back to REFR. I had a question yesterday. I said I'd look at it again today. I said I'd prefer to be looking at it. At the time we were looking at it, was at about 268, I think it was $2.68. REFR, Research Frontiers. I don't know what they do, but I'm looking at it and I'm saying, you know what? And then I said yesterday, I'd prefer to be looking at it between two. Am I going to remember it? Yes. I think I said between 232 and 228. The low this morning is, I don't even see that. Why is that not show? There, 229. So would I be buying it now? The MACD's come down a lot, but it's still positive. Stochastic come down a lot, and it's not so positive. It's 65%. This is leg D. Wow. I'm just going to say peak F at round number $3. Potential peak D if there's no new high next week. I'm going to say, you know what? You've had a fantastic run in this right now. Have patience. See, you might miss it completely because of what I'm saying. But I'm just saying to you, this is the area right here that if it can pull back and then make a low in the two, let me give you the exact figure. In a two, if it can come down, break 215 support, slide under 210 just briefly, but close that very same bar, close back closer to the 210 to 215 area, I'd say, okay, now you can start looking at it as trying to form a base. Send me an email, we'll look at it again. Right now, I'm just going to say to you, I personally wouldn't touch this right now. It's just, there's way too much risk. And the reward, it still has to get through a lot of resistance levels to the upside. No, I might be wrong, but I have to put it that way. Okay, next question I had was, so we did that. Yes, so a question I had was, oh, wow, tons of questions. Am I going to be able to get to them? Let me just, okay, congratulations, George. This morning I was thinking of you. I thought, wow, George, you nailed it again. George, I mentioned what George was looking at in General Electric. He said, I'm buying here. He was going to go out further by leaps. And now he's had earnings today. Do you think it will fill this large gap up? Thanks, George. George, that's a great question. My answer is glibly yes, but now let's do some work. G is up 14% at 10.40, up $1.31. This is very important action. I'll be back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So the GE looks really good right now. Will it fill the gap? I'm pretty sure. Let's do it as a technical study tomorrow, GE. I don't want to take time now because I don't know where it's going to close. Where it closes is going to be very important. I think there are a lot of people now convinced that GE's turned the corner. That gives it a really good cushion. It's going to be, is this guy going to announce bad news so soon? I think he's going to wait a while before he does any announcing of bad news. So SSYS is Strata Systems. Strata Systems. Did they change their names? Strata Systems? I used to call it something else. Strata Systems. Well, I guess that's what it's called. SS. All right. So it's in a G right now. The MACD has been really strong. I'm going to call this a G and then put in just because you need it's so strong that it could last just a little longer. I'm going to put a G slash, and it can only be G/C. Why? Because that peak D, this is not an instant restart. It made a peak D, it pulled back, it went sideways, it took 1, 2, 3, 4, 5, and then the 6 bar broke out, and the MACD didn't even know that it was pulling back. I love when that happens, and the stochastic's holding it really well. It's at 89%, so there's still internal strength. The question is, Basil sister, would you wait until it breaks 30 and jumps to 200 period exponential moving average? On the weekly before adding, weekly, let me see where that's, I don't even have it here. Oh, 30. Yep, there it is, 29.83. Wow, that's a good question. You see how long this thing can go sideways and then it breaks down? This is the pattern. This is the only reason why I didn't want to get into it before, even though I really like the pattern at the bottom. I love the stochastic going all the way to the single digits and then running so sharply. I think I missed this one because it moved so quickly. There was I think it got a recommendation about 3 days ago and it's just gapped up. So I like it. I think it's going to go high. It's in a single leg A up in the weekly chart. No, I wouldn't wait. Look, 25 and then you're going to wait to 30 to get in. Those 5 points that it could pull back once it gets there. I'm going to tell you what I would recommend doing. Now, I know the person who asked, I don't think uses options. If you did use options, I would take January, February, March. I'd go all the way to March and I'd buy a 30 call. I'd probably say to you, I prefer to pay a little more and make a little less, but you have a little bit more security and get something closer to the 25 if there's a 27.5. I don't know if it moves in 1 point to 2.5 point increments, 27.5. I would still be very reluctant to overpay right now at the high. Wait for a pullback, take your time, and then that's the way I would do it in terms of options. Now, number one. Number two is I'm looking at this and I'm saying to you, I love the fact that it's had a single leg A up. It's gotten through all the resistances on the left, especially the weekly chart, and now it's going to try to tackle the 26, just over 26 left side high. Give it a little time. if you're in it and you're making money, I don't want you to average down. I want you to average up, meaning not that you want to pay up. I want you to pay down so that your average price is lower. If you're buying it above 26 and your average price, and you've been in it since 18 or so, yeah, you're kind of taking away quite a bit of the upside. I'd rather have patience just to do it. I think the gap's going to be filled at some point over the next 2 weeks. It could be sooner than you think. Just have patience. I love the stock. You're in it. You're making money. You don't have to add to the position just because you want to double up. Take your time. Just like you've done all the way through. To have your usual patience, take your time. You'll have a really good chance to get in. So that's that. Next question. I don't want any more questions. I want to go to what I wanted to state. There are aspects to this market right now. Now look at this. You remember the E-mini? Remember what I said about this phantom peak? Let me make it red because that's what it would really be, right there, red. So look what we're looking. This is what we were going to. Unfortunately, I was right. I'm just about to start the show, and I probably would have got stopped out there, but I was about to go short right there to 27.0. I think it was actually 27.06. Yeah, I hit 27.06, but I 27.08 is the high. I know I saw it at 26. I was just about to click buy. But I wasn't able then to put my stop in because I would have had a fairly tight stop. I like to adjust them as I go in. So I left it alone. A big deal. So now it's at 26.98. There's always another opportunity. But look at the way the MACD's come down. Look at the way stochastic has come down. And if you were short earlier and it popped up and it took you out, maybe once, maybe even twice, this is the one you didn't believe. You thought, oh, no, it's relentless. Look at the 5-minute chart. Green, 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 green. Whoops, red. Retest the high. Don't make a new high. Boom, comes back down. So this is a peak E. I put the down area in a couple of breaks ago. And now what we're looking at is this really starting to look like it could turn. It hasn't yet. Not to a peak C, but it has all the inklings of a peak D. All the characteristics that I look for, except for one. The stochastic has pulled back to 74% from 80%. Well, it was much, much higher before. But look at the MACD, just about to turn down. That MACD turns down. It's going to take a while, quite a while, for the moving averages to cross negative. But this is what I wanted to show you. It's a beautiful demonstration. Great lesson. Another free lesson from the Tiger Technician's Hour. All right, let's go back to our story. So I had a question here, and the question is, gosh, where did it go? Question is, so what, if I can rephrase it, I just don't remember exactly what the wording was. So what is the weakest index that you would short? I think we have it right now. We have the Dow making, okay, I got to ask the question. Let me answer the question. INDU. So the Dow did make a high yesterday, a new recovery high of 25,000. This is incredible. It goes to 25,109. Yep, 25,109. Let me just change this. 25,109. I don't want to change the color yet. We still don't know if this is an F or it's going to recycle and go to a D. But the MACD is strong. Stochastic starting to weaken. On balance volume gave you a nice little reversal turn down, but the day is young. And you've got a little doji candle sitting here. You remember, I love the whole thing. I had a webinar based on what I call the silent doji. So we're going to be watching the close today really closely. Not good enough. I'm going to give you prices. There was iron reversal up or iron reversal down, and then iron reversal up again yesterday, meaning we left a gap from that gap, but not from the high of the 26th or 7th, or whatever that was. So now what we're looking at is price. And all I can say to you is the Dow is demonstrating by the characteristic of the internals. Can I do that now? I'm going to just do that. Give me a second here. I'll run through some of the things I'm looking at. So now you've got is Chevron rallying and CVX. Yep, it should be. Yep, it's in a leg F. Right now, it could have alternated. It could have an alternate count. And XOM is in leg peak C, and it hasn't gone above it. So why is that taking so long? Remind trade the next new build. Which version would you like to run? Current. Why did you ask me that question? Okay. So I am just doing a scan right now, and I'm going to show you something that I think is very interesting. You remember I said for about a year and a half, maybe it's 2 years now, I've been saying, I love the mix of the Dow. It's not perfect because it has 5 financials. Maybe that's one too many. And I wouldn't know which one to take out. Maybe, well, they do so many different things. American Express, MasterCard, Visa, they do different things. But then you've got JP Morgan, right? And you've got Goldman Sachs. Okay, we've got one more break coming up, and then we've got the final. I'll do this in the final countdown. I'll tell you what I'm looking.
The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Yes, so a couple of things. The weakest index, because of the makeup of the Dow right now, see, you've got Amazon. You're done now with Apple, and that was a big part of it. And you're done with Boeing. That was a big part of the Dow's move. But now you've got the NASDAQ, which could have, Google, Amazon. Amazon's coming out this afternoon. Amazon's acted really well since the low, but it isn't. Where did it go? Amazon is right here. AMZN. Amazon. If you look at the weekly chart, that is real nice. It started its leg B. I needed to see that. I didn't want to peak A minus failure pattern. And now it's broken to new recovery high at 1732. Amazon starts trading in the 1800s at any point in the next 2 weeks. Wow, that's going to be a statement. If it pulls back and it goes back under 1645, that's a different statement. So those are the parameters. What I am looking at here is that the mix of the Dow says that you've got so many positives and negatives. I was just running through during the break. Look at this. MasterCard screams. This is incredibly bullish for MasterCard. 211. all-time highs up in the 225 area. Wow. I mean, it plunges down to 171. What a comeback. American Express, it's doing okay. Not as well. It's doing okay. And Goldman Sachs Financial, not good at all. I had a question about Deutsche Bank, DB. What is DB trading at right now? Deutsche Bank, this is the European markets. You've got Germany. Not good. I mean, I'd be nervous here. Something has to, a type of GE has to happen. Spinning off, selling good. I don't know what they can do, though, Deutsche Bank, right? So this is not a good sign for Deutsche Bank. But when you look at our markets, I think the United States is a place to be. I think that the dollar is going to reflect that at some point. I think you've got a diversion right now between the overbought situation in the dollar. Gold is something separate. Gold is going to be telling us about kind of a fear, and maybe there's an inflation factor, but we don't see it yet. We won't see it unless you see high-grade copper up in the 3s. So this is a very interesting period we're in right now. I think we've got a bit of a breather coming up in the next few days. Let's look at our little E-mini right now. Yep, there's the dreaded H pattern. And wow, tell me if that doesn't look more like a D than a C, because the MACD just crossed negative. Stay tuned for Steve Rose. Stay tuned for Dave White and Tom O'Brien. I'll be back tomorrow. Check out my opening call.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.